Today, we are diving into a massive real-world case study on a stock everyone is watching, Alibaba. If you've been wondering where this stock is headed, you're in the right place. In this session, I'm taking you on a deep dive using the legendary Wyckoff technical analysis. We aren't just looking at basic lines. We are decoding the market's DNA through the laws of supply versus demand, cause versus effect, and effort versus result. We are strictly focused on the technical footprint, ignoring the noise of revenue and earnings reports to see what the smart money is actually doing. By the end of this video, we will compute a precise price target that could change how you look at your portfolio. Before we jump into the charts, if you want to master the markets and trade like a pro, hit that subscribe button and turn on notifications. If you find this analysis helpful, please drop a comment below with the word Wyckoff or ask a question. Your engagement helps the YouTube algorithm push this video to other retail traders who need to see this data. Let's help the community grow. Now, let's open up the charts and get to work. If you have not familiar with Wyckoff, I would recommend to watch my educational videos mapped to this in the YouTube card. I have discussed many concepts about Wyckoff and their principles. Look at that and come back and then watch it here, but I'll try to make it as simple as possible in this video so that it helps you. So this chart, what you're seeing here, is a weekly chart, and the timeline we have it from January 2020 to till today. It is almost 5 years of the data plotted in a chart where I am not using any other indicators here. What I'm going to talk today mostly on two things. One is the price action, which is on weekly. Each bar here is a 1-week price action and what it represents, its spread where the price opened and where the price closed. That's basically the price spread on every week. And then the other important one we are going to always take is the volume. So we simply, as per the Wyckoffian, we are always interested to work upon the leading indicators. Basically, the price action versus volume is the real one which going to give you most of the current chart's behavior. Anything else, either it is a moving average or MACD or any other RSI, everything else is computed based on lagging informations. So what we are focusing here mostly on leading indicator, which is basically the price action on present. So the chart, I have taken it for 5 years. The reason is so that I can explain you a complete Wyckoff case study from a markdown which started from the year of somewhere around end of 2020, like October-November timeframe. The stock started coming down from the peak of $304 US dollars, and the stock was continuously in a downtrend for a long period of time, almost like more than a year from 2020 November starting, and then it ended, almost like February-March time of 2022. This is almost a 1.5 year, and visually you can see that the stock looks, there is a downtrend and then there is a sideways movement, and the stock then being in sideways now moving towards an uptrend. At a high level, the markings I've made on this chart make the Wyckoff strategies look quite clear. However, when you're looking at a raw chart, it isn't always this easy. There is a systematic approach to these activities, and today I want to explain how we achieve this kind of deep dive using the leading indicators of price and volume. If you have questions as we go, please leave them in the comments so I can get back to you. You can also refer to my previous videos for more US stock case studies. I've covered various stocks in the past that you might find helpful. To understand Wyckoff, we must look at the 3 core laws. The first is the law of supply and demand. We know that when demand is high, prices rise. Conversely, when supply is high, prices fall. This is a fundamental understanding of the relationship between buyers and sellers. When prices are high, fewer people want to buy, but more people want to sell. A transaction only happens when there is an equilibrium, a point where the buyer and seller agree. The continuous shift in this equilibrium is what causes the price to move up or down. The second principle is the law of cause and effect. In Wyckoff terms, the sideways movement you see on the chart is the area where the stock is being accumulated or absorbed. The effect, the price movement, is directly proportional to the cause, the duration of the accumulation. In this case, the stock has been accumulating for nearly 4 years. Based on this cause, I have calculated both partial and full price targets. I expect the stock to easily reach the $238 to $264 range, which aligns with the previous highs around $280 to $290. Looking further out, the higher targets could reach $436 to $500, as there is still a long way for this trend to run. The third principle is the law of effort versus result. Here, effort represents the volume-hour leading indicator while the result is the price movement. Since this is a weekly chart, we are looking at the volume for the week versus the resulting price spread. By analyzing whether the effort volume matches the result price action, we can determine the true strength of the trend. There are many important aspects to consider when analyzing effort versus result. This analysis provides critical decision-making data by revealing what is truly happening with a stock. One of the most important factors is aligning ourselves with smart money, the large institutional investors. We should never trade against them. Instead, we should follow their lead. These investors are well-informed and understand a stock's potential far better than the average retail trader. To remain profitable, it is vital to trade alongside these big players rather than against them. But how do we know what they are actually doing? We find the answer by looking at price action and volume. I have placed dotted lines here on the volume indicator to categorize it into low, medium, high, and very high volume. You can see benchmarks at 50M, 100M, 150M, 200M, and 250M. In fact, around March or April of 2022, we saw a single week with nearly 500 million in volume. This signifies that something major is happening. Retailers alone cannot produce 500 million transactions in a week. This represents a massive interest, either heavy selling or significant buying. When you see these high-volume footprints, it's a sign that smart money is active. By observing the price action that follows, we can align our short-term or long-term investment strategies with their activities. I have briefly explained the laws of supply and demand, cause and effect, and effort versus result. For more detailed information, please refer to my previous videos linked in the YouTube card. Now, let's move to the next stage, how to perform a chart analysis. Whether you currently hold a position and want to understand the stock's behavior, or you are looking for the right time to buy, perhaps at $55, $64, or $66. A systematic approach is required. Wyckoff provides this system through 5 key phases. Phase A, stopping the prior trend. Phase B, building the cause accumulation. Phase C, the test phase often where a spring occurs. Phase D, the emergence of a new trend within the range. Phase E, the trend moving outside of the range markup. Identifying these phases on a blank chart takes practice. The more you practice, the more accurate your decisions will become. Let's look at Phase A on this chart. The current trend at the time was a downtrend, which finally stopped between February and June of 2022. Once the downtrend stops and the price begins moving sideways, it indicates that smart money recognizes the stock is undervalued. They begin absorbing the available supply to build their long-term positions. This is where the transition from a downtrend to accumulation begins. Essentially, we are looking at accumulation. Following the markdown, the stock entered a quiet period as large interests sought to keep the price within a tight range to accumulate shares. This process has been underway since June or July of 2022. For over a year and a half, a cause was being built. By maintaining the price between $100 and $55, they were able to accumulate shares at a low cost. However, before a stock is ready to mark up, they must test the remaining supply. This brings us to Phase C, the test. Market operators use various strategies to see if sellers are still present. In this specific area, the support line was momentarily broken, and the price dropped back to the $64 to $65 range, similar to where the selling climax occurred. But notice the volume. Previously, it was 400 to 500 million shares, but during this test it was only around 150 million. This tells us there are no longer many sellers left in the market. The stock then attempted to jump, came back to test the supply again on even lower volume near 50 million, and the test was concluded. We then entered phase D, where a new trend began to emerge from within the range. You can see the price creating a series of higher highs. Once we reached the upper resistance line, the stock confirmed its strength through a sign of strength, SOS, and a last point of support, LPS. Now we are in phase E, where the new trend has officially emerged from the range. How high can this go? I've computed the targets using Wyckoff techniques, which are based on the duration of the accumulation, the cuz, rather than just random numbers. Based on the 4-year base, my primary targets are $238 to $264, with a secondary long-term target of $436 to $500. Currently, Alibaba BABA has ended its 2.5-year sideways grind. The downtrend is over, and the new uptrend is being confirmed by effort versus result. As you can see by these pink arrows, the impulse moves are in harmony with increasing volume. Even with the recent minor pullback from the $192 level in October, the low volume on the drop shows that the buyers are still in complete control. While the ideal entry was during the test at $64 to $66, which would already be a 150% profit, there are still opportunities to enter at the last points of support, LPS, I've marked. There is still significant room to run toward that $238 target, which aligns with previous historical highs. I've covered a lot of ground today, but there are many more details regarding price action and context that I will save for part 2. If you found this case study helpful, please ask your questions in the comments and subscribe. Your engagement helps this video reach other retail traders looking to master technical analysis. I have linked my past educational videos in the YouTube card above. I have been practicing the Wyckoff method for over 6 years, and it is the complete package I use to determine my buy, hold, and sell targets. Thank you for watching, and I'll see you in the next video.